Welcome back to the Daily Stack. Today is July 30th, 2025. This is not financial advice unless your retirement plan includes buying the dip and emotionally coping with Dogecoin memes on a Ledger cold wallet. I'm your chaos conductor riding the red candles while the institutional whales quietly keep stacking.
Wake up, it's time to stack. Daily grind, no looking back. Crypto flows, the numbers crack. Get your hustle on the track. Flipping coins like pancakes hot. Blockchain buzz, don't let it stop. Digital gold in a virtual pot. Ticking clocks, but we got the spot. Big win, small risk calculated. Shots go wild, we're captivated. Mining dreams and wallets inflated. Haters left behind outdated.
Let's do a market check-in. The cryptos market just got served a brutal stew. Total market cap fell 5.5%, dipping beneath the 4 trillion threshold after nearly 98 out of the top 100 coins turned red. CoinGlass estimates over 447 million in leveraged long positions were liquidated in 24 hours, fueled by overloaded memes and altcoin overhangs. Bitcoin sagged 0.6%, hovering around 118,000, showing minimal volatility despite the carnage.
The notion that we've already been able to accumulate over 43,000 Bitcoin with an average price of just over 87,000. So we now own over $5 billion of Bitcoin, and we have an unrealized gain of already over $1.3 billion. So a pretty small team and a pretty young company that's already made over $1 billion. So a lot of progress so far, and I think it's just the beginning.
Meanwhile, institutional confidence remained unshaken. 222 million in a new spot ETF inflows dropped into BTC and ETH yesterday. BlackRock's iBit and Fidelity FBTC remained the lead buyers, with holdings of 870,000 Bitcoin now parked in ETFs. Ethereum slid 1.8% to about $3,790. But the narrative of strong institutional adoption is intact. iShares ETH ETF posted its 17th consecutive day of positive inflows, indicating commitment for long-term allocators while the sentiment wobbles. Altcoins and Layer 1s had uneven sessions. BNB cooled off from its recent high at $852, though it still leads July's gainer with a 30% monthly return. Solana dropped 3.8% and Avalanche retraced slightly. On top, Bitcoin dominance ticked past 60.3%, marking a rotation back to base layer stability during macro uncertainty. Broader macro events echoed in altcoin patterns. Markets are pricing the upcoming Fed decisions and trade agreement with the EU due before August 1st, which could tweak global risk sentiment and capital allocation into digital assets.
We're a Bitcoin company all the way to our core. That's even how we measure our performance. In my opinion, as a Bitcoiner, measuring your performance in dollars is not that impressive. My coffee's gone up in dollar terms. This chair has gone up in dollar terms. So is the S&P, so is the Mag 7, so is Bitcoin. Everything goes up in dollar terms because fiat continues to get debased.
Institutional conviction remains rock solid with 11.2 billion in spot Bitcoin and ETH ETF inflows for July and another 222 million influx yesterday. It's clear that institutions are double dipping the market dip instead of just fleeing. Major policy upgrades landed. The SEC formally approved in-kind creation redemptions for Bitcoin and ETH ETF, aligning crypto ETPs with commodities and reducing arbitrage inefficiencies. It's infrastructure milestone that should drive tighter spreads and smoother institutional access. In crypto-first news, BlackRock filed for an Ethereum staking ETF, a product that lets institutions earn yield on their ETH holdings via regulated TradFi channels. That's a major shift from store of value to yield-bearing asset, and institutions are salivating. Meanwhile, regulatory maneuvers continues as the Genius Act and Clarity Act are pending Senate review and could standardize crypto by law structures. The ECB has issued a formal warning regarding US dollar-backed stablecoins undermining Eurozone monetary control, highlighting the rising tech nationalism gap. On the adoption front, PayPal's Pay with Crypto expansion into Brazil and Singapore, settled by PYUSD, underscores how mainstream companies are dragging crypto into everyday payments, especially when Europe drags its feet. Numbers don't lie. According to Glassnode and blockchain tracking platforms, whale wallets are withdrawing BTC and Ethereum to cold wallets faster than ever, consolidating into long-term hold positions. Ethereum staking now accounts for 30.1% of all supply, and exchanges' reserves are at multi-year lows. Less float equals more squeeze potential. Ethereum futures open interest climbed to a multi-week high of 7.85 billion, with funding rates normalizing quick post-liquidation. The Fear and Greed Index fell 268. Institutional players are already snapping up the fear while retail bundles exit altcoin speakeasies. Most low-cap tokens got crushed yesterday as whales took profit and inexperienced apes exited en masse, especially Bonk, Whiff, and Fartcoin, which fell between 18 and 30% respectively. But the OG meme coin scene still holds power. Dogecoin saw frenzy-level accumulation. Whales bought 130 million Doge in a single day, lifting holdings from 49.26 billion to 50.79 billion tokens. That's institutional-level accumulation, not just a random tweet trade. Doge prices hovered near 22 cents before bouncing to 23.6. offering a classic double bottom setup with immediate resistance at 24 cents. Technical indicators like RSI suggest oversold conditions while MACD remains bearish, but a crossover could trigger major upside. If Doge breaks above 25 to 26 cents, it could run towards 33 cents. But if bulls hold momentum, 40 cents or even $1 isn't outlandish for a $1 trillion market cap coin. Institutional whispers about a possible Doge ETF filings are fueling the buzz too, though nothing is actually confirmed yet. Not to be ignored, newcomers like TrollerCat raised $425,000 in Stage 15 presale. At the same time, community token Punisher Coin quietly grew TVL, staking features, and deflationary burns, saying, "No meme, just mission." Its recent whale growth hints that even more meme tokens with structure can gather strategy-driven capital. And that brings us to the tip of the day. This isn't a criminal downturn, it's just a stress test. If you survived Bitcoin and Ethereum dips, congratulations, you earned your seat at the table. For meme bags, here's your checklist. Set exit targets and scale out, especially if Doge or any token is giving 100x hype signals. If you're holding fundamental tokens like Bitcoin, ETH, or even high conviction Doge, sit tight. This cycle's built for endurance, not instant gains. And if you're still chasing the next meme rocket, do your research. Stack small and pray the dump doesn't come faster than the pump. Stack smart, stack daily, and I'll see you degens tomorrow.
Room for hacks, paper hands they fade to black, diamond grip no looking slack, crypto kings we lead the pack, market swings like a wild typhoon, moonshots promised under the moon, stay on top don't snooze too soon, this is the anthem, the crypto tune.